Hey folks, Simon here with your Tao Daily for Tuesday, the 8th of April 2025. Tuesday was another interesting day on the market, certainly a disappointing day for the bulls. If you have a look at the S&P here, the S&P was up 4% at one point today, only to close down 1.57%. If we look at the Nasdaq, the results were even slightly more disappointing. The Nasdaq was up 4.6% at its high intraday, only to close down 1.8%, blowing its biggest intraday gain since 1982. Another way of putting this in perspective is to consider that at 10:30 a.m. The market was enjoying an 88% upside day. That means 88% of all volume was in rising issues. By the close, it had turned into an 88% downside day. So quite the intraday turnaround. Now, a couple of other things that are potentially more interesting than what's going on in equities at the moment. One is in bonds. All right, if we use TLT as a bit of a benchmark here for what the bond market is doing, it has had two pretty big consecutive down days in a row. It's broken its 50-day moving average. In the process, 10-year yields, which got snuck under 4% late last week, are now back up at 4.26. We look at 30-year yields, the old TYX, they have actually had the biggest two-day surge with equity markets down 1.5% or more over the same period since 1982. All right, so 1982 showing up as a bit of a banner year for comparisons. But when you think about how much pain and wealth destruction has been inflicted on the equity market, you look at these rising bond yields and you sort of think, well, you know, what's it all for? The third thing that I want to show you today is what's going on in volatility markets. The VIX here has got a backwardated forward curve. What does that mean? It means future VIX futures prices are lower than spot. What this means is that the totality of market participants think that the VIX will be lower in the future. In other words, they believe demand for put buying will be less in the future. Another way of saying that is they believe the drawdown is coming to an end. Now, most of the time, drawdowns will end within a few days of VIX futures curve sliding into backwardation. There have been a couple of notable exceptions to that. One was post the Lehman collapse in 2008. The VIX was in backwardation for 63 days, and then when the US lost its AAA credit rating in 2011, that led to a 76-day period of backwardation. So it doesn't have a 100% track record, but usually VIX into backwardation means positive forward returns for equities. If we take a quick look at the VIX, that is back in the 50s. One thing I've got high conviction on here is that the VIX will be lower than 50 in a month's time. All right. Will the equity market be higher in a month's time? You know, maybe, maybe not. Gun to my head, I'd say there's probably a greater than 50-50 chance of that. But I feel pretty certain that the VIX will be lower than 50 in another month. And that taking advantage of elevated volatility, shorting volatility here is probably slightly more forgiving trade than trying to pick the bottom in the equity market. That's what I got for you today. I hope it helps, and I'll catch you tomorrow. Thank you.